Hey everyone, Luke here from Vaulta. Today I'm super excited to share with you Vaulta's latest feature, which is our Dividend Tax Calculator. So quick video today just to take you through the basics of how it works and how we would recommend that you use it in your day-to-day communications with your contractor and freelancer clients. So when you log into Vaulta, go into a company, this will be the screen that you're used to seeing. So I'm just going to quickly run through what we have here. So we have the dividends available figure, which is what they can take. So £9,741 available. And then down the bottom, you can see that we have both Jill and Joe, who are users on the free agent account. So Joe has some salary available, some expenses. He's got an overdrawn directed loan account. Jill has no salary, but she does have some expenses owed to her. So one of the things that's been really important about when we communicate this data with clients is that they understand the implications of taking dividends. Because as accountants, we know that there will likely be the personal tax to pay on those dividends, and clients can often struggle to understand how that works, and it can be a risky situation for them, drawing out too much money and not setting aside the tax. And this is where the tax calculator comes into play. So along the top now, you can see there are two tabs. So we can click on the tax calculator. It will default to the current tax year, but we can also go and select next tax year. The allowances and rates and percentages, etc., are already in there for the 23-24 tax year as well. And when you come down, you will see that at the moment it's blank for employee, and the 4 data fields that you can enter data in, you can key data into these freely. So gross salary, the tax deducted on the salary, actual dividends to date so far this tax year, and then the forecaster for the remainder of the year. So you can go and type whatever you want into these fields. But in this example, I'm just going to go and pick Joe. And you'll see that it's populated the fact that it knows it's already had £50,000 because it's pulled that figure out of free agent for that user for the tax year that we've selected. So we know he's had £50,000 so far in dividends. I'm just going to move down here so you can see this. You can see the tax figures down here, which we'll go into in a minute, but these will update as we type figures in. So for this gross salary, we know that his annual salary, like most clients, is on a fixed annual salary. I'm going to say he's on £12,000 and no tax deducted. See the figures updating there. We know he's already taken £50,000 in dividends, and we've had a conversation with Joe, and he's told us he's going to take a further £5,000. So now we can see total dividends for this tax year are going to be £55,000. Total gross income, £67,000. And now down here, we can see what his personal tax liabilities will be on those salary and dividend combinations. Obviously very simple, deliberately so. Some clients will have more complicated tax affairs, but for the vast majority of clients, they're just going to have salary and dividends from this company, and this will take care of it. It's not factoring any payment accounts he may have already made, so you need to be aware of that. But we can see now that on the 31st of January 24, he's going to have £8,770.13 as a tax liability, and it also calculates and makes him aware of his payment on accounts. So he knows the total payment that's going to be due by the 31st of Jan 24. And that's it. It empowers you, very simple but huge value to you as the accountant and to your client, because it empowers you to have these conversations and play around with various what-if scenarios. So in this example, we're quite at the end of the tax year. Joe hasn't got a lot of wiggle room there, really. But what if we went to next tax year and say, okay, next tax year, Joe, though, if you're on a salary of £12,000, let's say you've now got 0 actual to date, and we're going to say you're going to take, let's say, 30,000 because you don't quite need all the money you've got there. What will the tax liability be there? So you can play around and it encourages you to have these conversations with your client. For you as accountant, you can share this with your client, but probably going to overwhelm them. But for you as the accountant, you can also click expand, and you'll go down and you'll see all the calculations behind. So pay, being salary, dividend, income, the various tax rates and allowances, and how that calculation is formed. So if you are already a Vaulta user, then you'll see this live. This is already live. It's been live for a couple of days now. So you can just log in and have a play around with this and start building this into your your tax planning at this time of year with clients, but also as an ongoing communication tool around tax. Because yes, March is a great time to talk about tax planning, obviously, as we reach the end of the current tax year, but there should be a conversation we should be having ongoing with our clients. If you're not currently a Vaulta user, reach out to me and we can hop on a call and do a demo, or you've got access to the free trial that you can go and log in, sync some of your free agent clients and have a play around yourself.